Hi everyone, welcome to Value. So today we're looking at a company that you all know so well, and that's Alibaba. This company is a giant in its outright, but the one thing that hasn't been going well for it is its share price. The share price has just been dipping and dipping and dipping, and everyone's wondering, where is the sign to buy? Like, where is the price that is worthy of buying? And I think right now is the timing. Like, why do I think right now? Because I think the tides are starting to turn in Alibaba's favor. So firstly, if we go back 5 years ago, this stock was at like $115 or so. So basically today, we are trading at a very similar value to what it was trading 5 years ago. And the question is, has this company not grown? Because the company, if we look at the financials of this company, 5 years ago, it was doing a lot less in revenue. Like, even like if we take 2018 or so, they were doing 39 billion in revenue, close to 40 billion basically. And in last year they did 109 billion. So basically the revenues have grown so much, but the share price is more or less pretty similar. Which just kind of brings that question, is that outrageous, or is there deeper underlying problems that we're not seeing? So if we come back here to this chart here and we go, oh, in 2020, this company had a peak price of $300. So all of a sudden we're looking at a company that went from $300 to $110, which is a massive disintegration in value. You definitely hope you were not to buy at that top, because it's always so painful buying at the top, and especially holding right to the lows. So you know but that is the reality. Sometimes when you invest in stocks, you do get caught up in the hype, you do get caught up in momentum, but you just don't want to be the last one on that roller coaster, because you're really going to be screaming on the way down. So this company right now, $110, 300 billion in valuation, whereas we look at Amazon and that's over $1 trillion, and we go, should Alibaba be trading at their highs? Because at their highs, $300, basically it's about a 900 billion valuation, round about there, which would kind of bring it close to that $1 trillion mark. So that brings the question, should they be closer to Amazon, or are they actually fairly valued at the current situation? Like, I don't think they're fairly valued at the current situation, but I don't think they would be anywhere near $1 trillion mark either. Because if we come back here and we go, Alibaba revenues 109 billion, whereas we look at Amazon revenues, where are we at? Okay, here we go. So Amazon revenue for last year was $469 billion. So you put that into scale and we go, okay, if Alibaba's only doing a quarter of that, then maybe they're only worth a quarter of Amazon. But it never works out that way, of course, because Amazon, at the end of the day, firstly, we're going to measure growth. So growth, they're growing, last year they grew 21%. Whereas Alibaba last year grew over 50%. So there we have difference in growth. So suddenly the valuation, it won't be a quarter, because Alibaba is clearly growing more. So they're clearly worth more. In my view, probably closer to that $500 billion mark, rather than where they're at right now, which kind of leaves a good upside. Like, if I present you this scenario, like, if Alibaba starts trading lower, it begins to look ridiculous, because this company basically dominates in basically in China with their e-commerce, and basically a lot of parts of the world basically order stuff from them, and it's like saying people aren't going to order stuff from China. The thing is, that's not likely to be the case, and their dominance is so much that it's hard to say anyone's going to be able to topple them. Like, there are strong competitors out there, so don't get me wrong around no one coming in to compete with them. Like, there's a lot of competition, but they're at the size where basically it's hard to see other competition coming in taking it over. It's like Amazon, it's hard to see many companies be able to topple Amazon. So Amazon is basically it's strong in a lot of places, particularly in the US. And the same for Alibaba, it's strong in a lot of places, but particularly in China. And that's kind of how we look at things. That hey, Alibaba has immense growth ahead of it, growing over 50% last year. Its valuation is at 300 billion. At 300 billion, basically we're at a quite a low value. Like it possibly could go lower, but if it ever goes lower, I think those are clear buying opportunities, because you're investing in a company that's just massive out in its own right. It's got so much potential ahead of it, and it's just growing like clockwork. We look at a company and we go, okay, then if this company has so much potential, why has it been going down? Well, it's been going down because of many things. Firstly, the Chinese government was cracking down on Jack Ma. How you saw Ant Financial, their IPO get stopped, and then Jack Ma disappearing for a while from the public scene. And then basically that left a lot of uncertainty around Alibaba, because we're like, oh, if Jack Ma and Financial got taken, what happens to Alibaba? Like, is it going to have political risk? Because that's very real. Political risk can basically destroy a company if it's quite badly done. So then we consider also, hey, the US government also wants Chinese companies listed in the US to be even more transparent. They want to see their audited reports for the last 3 years. And the thing is, Chinese companies can't do that because there's the Chinese law that prevents them from doing that. So talk about being stuck between a rock and a hard place, because even if they wanted to, they're gonna break one rule or the other, because if you try to please the US listing rules, then you won't be pleasing the Chinese government, and if you try to please the Chinese government, you're going to get delisted in the US. So then all of a sudden that puts a lot of fear in people around these companies. If you get delisted, no investor wants to hold these shares. So then we've got these massive problems. Also, back in 2020, we only saw 28% growth. So all of a sudden we have a situation where this company in 2020 was at $300, but then those financial reports came out, growth was slowing, and it really started to make people fear that when the price starts to drop, people start feeling uncomfortable, people are holding on to losses, and then people start selling, and then basically it just has a negative sentiment around it. So all of a sudden the stock is very unpopular, no one really wants to hold it, and yeah, like basically everything that's bad about it basically was, in the last 2 years, everything bad all came out. But now I think things are starting to change tides. So basically we have the Chinese government slowing down their crackdowns on tech. Clearly things have sort of been resolved around Jack Ma's kind of situation, not quite, but it's clear Alibaba is not a target. So because I think if you're the Chinese government, you're less likely to go after a giant like Alibaba, who has a global presence that you kind of want to facilitate trade. Like if you hurt Alibaba, you start to hurt trade, and you don't want to hurt trade. So I think Alibaba is safe in that, right? And then we look at the listing rules. So recently we've had an article that came out. Basically, China removes key hurdles to allow US full access to audits. So all of a sudden we have a situation that, hey, the Chinese government also sees that, hey, it is still valuable to have Chinese companies listed in the US, and we want to kind of bridge that gap and not make it difficult. So now we're seeing some changes by the Chinese government to possibly keep these Chinese companies listed in the US. So as the article says, China modified a decade-long rule that restricted offshore listing financial data sharing practice, potentially removing a key hurdle for US regulators to gain full access to auditing reports of the majority of the 200 plus Chinese companies listed in New York. The revised draft rules deleted the requirement that on-site inspections should be mainly conducted by Chinese regulatory agencies or rely on their inspection results. The China Securities Regulatory Commission, CSRC, said in a joint statement with other regulators on Saturday, April the 2nd. So suddenly we have a change in tides that, hey, government's all for it now. Government's wanting basically it's all in Alibaba's favor now. So we have a situation that, hey, it starts to bode really well. That growth is back for the company. The government's not cracking down on it. The US listing uncertainty is potentially being removed. So all of a sudden we have this certainty in all directions for this company. And on top of that, we have Charlie Munger, who basically doubled his holdings in Alibaba. So as it's put, Charlie Munger just doubled his bet on tech giant Alibaba to $71 million, and that was in January. So basically he's been buying in January. Like, where was the price in January? If we come back a year ago, basically it was around $120. So more or less 120, even between 110, 130. Like, I'd say he'll be buying within those ranges. And basically, if Charlie Munger is that confident, then basically I don't think we should be not that confident, because as it's put, they have a saying where when everyone is fearful, you should be greedy. And I think everyone was quite fearful for quite a long time, and that's kind of normal. There was a lot of uncertainty, but now we're looking at a situation where potentially we should start being greedy, because a lot of things are being resolved. A lot of things are starting to head in the right direction. We've got earnings dates around May for Alibaba. If the report is really good and the growth is back in the stock in terms of consistency, because of 2020 was a little inconsistent with the growth pattern. But we've seen Alibaba grow at an immense pace. Like 2019, growth was 40%. Whereas 2021 growth was 52%. So we're seeing growth just really take off. That usually growth starts to decline because you're working with larger numbers, but we're actually seeing this to be untrue in this sense, where the larger numbers they're getting, the growth has actually been increasing last year. But I mean, that could be also for obvious reasons, because the manufacturing of the world has been very reliant on China. Potentially that could also change. So there is some risk that, hey, potentially some manufacturing is starting to be diversified, where companies once relied all on China, maybe they decide we don't want to rely on China for 100% of everything we order. So that's also one of those situations that you need to consider, that, hey, it's not without all the risk, but so far, like, all the conditions for a stock to succeed are starting to come back in this one, especially since we've reached basically a low for the stock. The lowest low was $86. So I mean, that obviously came out with a strong rebound, and now it's back at around 110. I think 110 is a very strong support for the stock, and 300 billion is quite a little bit undervalued. Like, I wouldn't say it was extremely undervalued. I think it's okay where it is. My view is the stock should be trading probably closer to that $500 billion mark, which leaves you with a good upside. Whereas the downside, I don't think the downside is that much of a downside, whereas the upside is a lot more than the downside, which is where we work with probabilities. In investing, you can never be certain, but you always work with probabilities to go, where is my upside versus my downside? And here we clearly see the upside is much better than the downside, and hence why it's a strong proposition to consider Alibaba, because of especially how established the company is as well. to find established companies trading at a very low pricing. It's very hard to find, especially something like the size, and especially where the opportunity looks actually quite clear. That hey, if you invest today and you don't actually get an upside in the next few months or so, in the long term, you're gonna come back because the company is strong. The company continues to grow. Eventually, the value comes back and it catches up. So it's a matter of, hey, if you're in this in the long term, you make money. And that's the kind of considerations we all want to consider. We want to consider the long term, the medium term, and also the short term, because the short term, does this rebound or does it continue to drop? And that's kind of the situation. Like I think in the short term, like if China basically gives access for auditing in the last 3 years to the US, I think we're fine. Alibaba can stay listed, and basically people are happy to continue buying back into the stock. Whereas with risks of delisting, no one wants to hold a large position. But if there's no threat of delisting, then you have funds willing to buy back in, because at the end of the day, like it's a lot of funds would have probably sold out or reduced their risk because they can't hold that much of a large position, and they have their own rules that govern that as well. So I think the minute things change, we're going to see a good upside with this stock. But that's my opinion anyway. Let me know what your opinion is. And basically, if you've got any questions or anything, post below. Feel free to like and subscribe. That is always really appreciated. Until then, good luck investing, everyone.